In response to inflation, the IRS just increased the mileage deduction for business travel. What's up, everybody? It's Sherman, the CPA, and today I'm going to walk you through the new changes for deducting your business travel. Now, the primary reason for these changes is due to the rapid inflation taxpayers are currently experiencing. The most recent inflation report shows inflation running at a 40-year high. And gas prices in particular just reached $5 a gallon nationwide for the very first time, which also means that gas prices are at an all-time high. So for taxpayers who engage in a lot of business travel, this is obviously going to negatively affect their pockets, their households, and potentially how they conduct their business. So in an attempt to reduce the pressures of inflation on taxpayers, the IRS just announced that they will increase the mileage rate for the remainder of 2022. IRS Commissioner Chuck Reddick specifically stated that the IRS is adjusting the standard mileage rates to better reflect the recent increase in fuel prices, and that they are taking this special step to help taxpayers, businesses, and others who use this rate. So in short, this means that you will get a greater tax deduction for the miles you drive for your business. And if you stick around until the end of this video, you will find out how this deduction works, and more importantly, what type of impact this may have on you if you use this deduction. So if that sounds good to you, please go ahead and click the like button below to help this video reach more taxpayers who may be able to use this to put more money back in their pockets. And as always, make sure you subscribe to our channel for even more ways to save on taxes and increase your wealth. All right, so the standard mileage deduction applies to taxpayers who conduct business travel. Business travel is travel from one business location to another business location. Now, the miles you drive between these locations are tax deductible with the standard mileage deduction. With this deduction, you would simply tally up all of the business miles you drove for the tax year, and you would apply a mileage rate to it to determine your overall tax deduction. This mileage rate is set by the IRS, and typically they update it every year or so to keep up with the cost of inflation. And since inflation is running crazy right now, they just updated this in the middle of the tax year. So let's go ahead and look at the mileage rate changes. All right, so for the first half of 2022, the mileage rate is 58.5 cents per mile, which is what it was initially supposed to be for the full tax year. But the new mileage rate as of July 1st of 2022 is 62.5 cents per mile, which is a 4 cents increase per mile. But let's run some numbers here and see what type of impact this may actually have for you. So let's say you drive 16,000 business miles for the tax year of 2022, and 8,000 of those miles were driven in the first half of the year, and 8,000 miles were driven in the second half of the year as well, which means the first 8,000 miles would be subject to the 58.5 cents per mile rate, and the second 8,000 miles would be subject to the 62.5 cents per mile rate. So 8,000 miles multiplied by the 58.5 mileage rate would give you a deduction of $4,680. And the second 8,000 miles would give you a deduction of $5,000. So in this example, your total tax mileage deduction would be $9,680, with the increased mileage rate kicking in the second half of the year. And without the increased mileage rate, then your total deduction would have been $9,360. So all in all, you would have saved an additional $320 with the increased mileage rate under this example. Now, certainly this is not life-changing money, but maybe it will relieve some of the higher fuel costs taxpayers are experiencing at the pump. And of course, for people who drive more business miles throughout the year, they will see even greater tax savings as a result of this increase. But regardless of this increase, deducting your business miles has always been a great way to reduce your tax bill. So if you are driving miles for business travel and you you are not deducting them on your tax return, then you may be paying more money in taxes than you actually have to. And if you want to learn more about how to deduct your business miles or other ways to deduct your vehicle, then check out my video on how to deduct up to 100% of your business vehicle. Anyway, let me know what you think about this video in the comments below. And as always, thank you for watching, and I look forward to seeing you in the next episode.